is creation, learn and fun. And here I'll talk about today investments. If we talk about investments, we can see very two different things. Those things are shares and bonds. And I did many videos on shares. Do watch them, do like them, do share them, do subscribe my channel. Now I'll talk about bonds. First, if I'm going to talk about bonds, first I'm going to tell you what is the difference between share and bonds. Firstly, bonds gives us a very guaranteed income, which is interest, and shares do not give us a guaranteed income. We have to understand share, we have to understand different companies, and we have to understand the performance of different companies, and then we need to invest in shares. But by share we can make a profit by selling the share and also by earning dividend, which the company gives at the end of the financial year. Now coming to bonds are here we get a guaranteed income, which is called interest. To my opinion, we should always keep our investment very diversified. If we are investing, we should invest in bonds, we should invest in shares, we should invest in real estate, we should invest in gold. Okay, so these are the areas of investment, and today I'll talk about bonds. So we get an interest which is very fixed, and we may get it semi-annually or annually or at the time of maturity. Okay, so if we fix an amount with a corporate house or with the government, that is the government bonds are all, we get an interest which is very fixed, and we may get it semi-annually or annually or at the time of maturity. Okay, so if we fix an amount with a corporate house or with the government, that is the government bonds are always supervised or controlled by the Reserve Bank of India. So we come to bonds and we find these are fixed instrument, and we earn from it. And the investors who is buying the bond, who is buying the bond from the government, or who is buying the bond from a company or a corporate house, is giving money to the corporate house, and it's kind of the corporate house of the government is a borrower. Okay, it's a debt or the loan for the government or the corporate house, and in return of that they are giving an interest. Okay, so the government or the investing house, whoever is that, they are taking a loan for their new projects and all, and they are taking a loan from the public of India. That really means a bond. Okay, hello, government bonds are really secured, and RBI floating rate bonds are very good, which are started issuing from July 1, 2020. It is issued by the Government of India, managed by the RBI, and the interest rate is 7.15%, and they will give you the interest in every 6 months. That is, you'll get an interest of 3.575% each 6 months. That is, for every 100 rupees you'll get 3.575 rupees in every 6 months. Now you multiply the amount of money how much you're investing, and you can get these forms of this bond from different banks like ICICI Bank, Axis Bank, HDFC Bank, and also from SBI and all the other nationalized banks. Means public sector means the government banks like SBI, PNB and all, etc. PNB and again UCO Bank and everything. And these are very guaranteed return they'll give you. And I feel if you're planning an investment, you should invest in good stocks. I have also videos in share market for the understanding of share market, Nifty 50, market capitalization. Do watch them. And you should also invest in bonds. Share market, you can get a high return, but the investments are risky. You can also have a loss, but these bonds are very guaranteed. So you must have some risky investments from where the returns are high, and you must also have a very stable investment where the returns are low but guaranteed. So in this way you should diversify your investment so that you have a risk and high return element in your investment, and again a very guaranteed but a bit low income from the investments. So these are very important. So these bonds are open for subscription for any resident individual. Resident individual means people who are living in India as a resident, and not for NRIs. The people who are not living in India for a long time or does not meet the Resident Act of the taxation of India, they are not allowed. And so the people who are living abroad but Indian origin, they cannot invest in this bond. And HUF means Hindu Undivided Family, which means a particular business form, which if you register your business under HUF, you can have this bonds. And again, a resident of India but not NRIs or who are not living in the country, the people who are not living in the country cannot subscribe or buy this bond. And the individual can buy in individual basis or joint basis, like 2-3 people together at a time. They can invest together by filling a form from the banks. Again, it's a 6 months interest, and every January 1 you'll get the interest. Again in July 1 you'll get the interest. And you can invest a minimum of 1,000, and again you can invest multiples of 1,000. That is, you can invest 2,000, 3,000, 5,000, 4,000, and its bond has no limit or ceiling. You can invest, or you can buy these bonds or give the government loan as much as possible, and you can move your surplus money which are sitting in the bank idle, and you cannot generate so much of income out of it. You can invest in this bond and earn a higher rate of interest. The bonds are called floating rates because the bonds interest may change. Floating rates interest bonds, because the bonds interest may change, and because if the interest of the NSC certificates, which are the certificates which are issued by the Post Office of India, if you want to save again in a very guaranteed area, you can save in NSC, which you can find from the post office, and you can invest. The bonds are always 0.35 or 3 rupees over than the NSC, and and if the NSC rates increases, if the NSC certificate interest rate increases, the bond will also increase 0.35%. Okay, and the fixed tenure of the bond is 7 years, that you can't take out the money out of this bond before 7 years, and there is a 7 years fixed, you have to keep the money. So you should always keep the excess amount of money which is not required for you within the 7 years, and you can earn a good income from it, which is guaranteed. So here is a review of my government bond, and there is a comparison with the share market. Do watch, share, like and subscribe my channel, and do watch my other share market videos on Nifty 50, on market capitalization, on basics guidance of share market. And do tell how you like it, comment, and if you like any other investment, you want to know any other kind of investment, do tell me. And again, if you need any sort of classes in Zoom, financial management, costing, accountancy, any classes, I'm there with a very reasonable cost. Do comment on my comment box, and till then, goodbye.